Hi, Ron. Hope you're well. Sorry about that. I was starting the wrong. I actually started the wrong webinar. Let's make sure you can hear me loud and clear because I've got everything set up differently. The headset looks all right. The video camera looks all right. Do you like that door behind me? I'm sat in the annex of a very nice cottage in the middle of the Cotswolds in southwest England. So. And the internet is actually pretty good, so things should be okay today. So, hope you're well. It's Thursday. It's the 17th. Welcome to theproptrade.com. I've even got my official T-shirt on today. The dogs are lying literally next to me down here. The big one's disappeared. The little one's fast asleep, but she's deaf as a post. So if you hear some barking, it's the dogs have kicked off. But everything else is good. The camera's not great, is it, being this close? Let me make myself a wee bit smaller. There we are. Right, so I've got the Forex Factory calendar here on here. I've only got one screen to play with, so I'll be jumping between tabs. So just bear with me a second. So basically, today it's really big data dump. The dollar's improved. It's been, as we've been saying all week, it's improved over the last 3 or 4 days. That improvement continues. Euro, sterling, all at key levels. Dollar, yen, as Aussie, all the majors, CAD, all at key big round numbers in line for them. So as you can see on the chart, well, I hope you can see the Forex Factory calendar here. We got core retail sales coming up. Unemployment claims. Remember, the unemployment claims really looking really quite strong, as we saw the last few weeks. We had that these three, what looked like an initial outlier, like we'd had the last 3 or 4 times. We got up to 240,000 3 or 4 weeks ago when we went to over 240. Then we went 245. Then we were also over 240 at 245 to 3 months. 3 weeks consistently. So that was looking like this trend was looking like that was moving up. And then we've turned around in the last 3 weeks as well. So last week we were down much lower than expectations. Remember, the brown blobs here are what the market is expecting. The brown ones there. The blue is the actuals here. So we've come in better than expected. See what it looks like this week. As far as retail sales is concerned, we so I've only got the month on month. That's why this calendar isn't the best, but let's use the core because that's the key one. So we're expecting a bit of a bounce back this month. You can't really tell on the monthly one there. It's not great, is it, on there? If I just bring in our calendar, just bear with me a second while I do that. I can get rid of that because I'm only running one. Can you still see? Hopefully you can still see Forex Factory. That's right. Yeah. So let me just bring in. Let's go to the calendar. Oops. Prop trade. All right. Oh, my calendar's not running for some reason. Come along. Come along. Well, it's not working. Let's go back to Forex Factory then. Anyway, the point is, retail sales have sort of held up here on a monthly basis. Remember, retail, the headline number is expected to turn back quite positive, so it could be a full 1% turnaround if it comes in as expected in 7 minutes' time when that data kicks off. And the other key bit of news, perhaps not as market moving as the other two, remains the Philly Fed. Remember, on Monday we had the Empire State, the New York State manufacturing area coming in much better than expected. The Philly Fed, Philadelphia, key swing state, 20 college election college votes for the president. He managed to capture Philadelphia with the help of Mr. Musk giving away millions of dollars. But anyway, that's a story for another time, wasn't it? So Philly Fed manufacturing index, again, another volatile indicator. So hugely positive here as we kicked off the anticipation of the Trump sort of regenerating manufacturing, bringing home jobs and all the rest of it. But then we've reversed really aggressively to the nadir in April when we'd had the announcement of the tariffs, and we've sort of cooled a wee bit in the last couple of months. So see what the number looks like this month. But I mean, as you say, as I've said, quite a volatile indicator. So hold too much sway. What the Philly Fed manufacturing index says on its own. It's obviously just another data point that we take into our toolbox of trading data and decide what we're doing. So if I just bring in, share this tab, there we are. You should be able to see my screen now. Let's just check what you can see. There we are. That's the screen. Yeah, it's me down the bottom corner. There we go. Let me just bring in the chat. The chat's here. Akesh is here. Let's have a look. Good morning, good afternoon, good evening, wherever you're, my friend. Any particular asset, Ashk, you'd be interested in me to screw my analysis across? This was the pound Kiwi you can see on the screen at the moment. This is one we took long last night on our Discord group. Remember, on our Discord channel, if you're on Discord, do join us. If you're not, general chat is where all the questions are answered instantly. We're really good at that. Katzen, Thompson, and Johnson, the three sons, our support team are absolutely on the ball, and answers questions don't remain unanswered for very long. But guys, you owe it to yourself to do your own due diligence, do your own research. There's loads of stuff on the website. It's very, very clear. A lot of the people are putting questions on there. With all due respect to you all, read. If you're not reading our very simple, very clear website, you as a long-term trader, I would have a big question over you, to be honest, because it's showing a lack of respect for yourself, respect for your own money, respect for the account that you've opened or the challenge you've opened. You've got to respect your account, respect your money. Don't come into this with a gambling mindset. It's all about managing what you have, not getting too aggressive, not getting too scared, taking the trades when they come up, having a system that works for you and an edge that works for you. Because anybody, anywhere in the world, wherever you're from, your creed, your color, your religion, whatever you believe in the rest of your life, anybody can be a successful trader, wherever you are in the world. So the very best of luck, everybody. And all the stuff is stuck up here on the general chat. And under trading strategies, every night or most nights, 4 nights out of 5 normally, at least, if not 5 nights out of 5, I will post some trades that I've taken just in the last sort of 20 minutes before I post them up here. So last night, there was only 2 positions triggered on my little system, my end of day system, or one of my end of day systems that I shared with you here. It was a long on the sterling against the Kiwi, and also long the euro against the Kiwi yesterday. And both of them, obviously it doesn't happen all the time, but overnight, both of them hit their target. So we were 53 pips up for pound Kiwi and 53 pips up on euro Kiwi. So if I, I'm not actually sharing it, am I? Sorry. Just realized I wasn't sharing it. So there we are. That's what I've just been talking about. This is our Discord group, and this is my not mine, but this is the trading strategies area of it. Nearby the 2 trades we took last night. So now I woke up this morning, we were 93 pips to the good. So we've got a positive week. So far this week we're up 474 points. Just on this, before the data comes out, obviously the points. When I register the points, it's not percentages. So obviously, when we're trading things like the SPX or even things like pound yen and pound against Kiwi, they move a lot more than say euro does or dollar yen does. So from a points point of view, especially with the indices and gold and what have you, the numbers can look very big, but from a percentage terms, the risk is always about the same. It's about 2 and a bit %, 3% sometimes on my particular trading platform. I'm not saying on my particular trading approach, but it's usually certainly under 3% on any one particular trade. And I tend to, when I've got 10, 12 trades open, I'll reduce the risk so it's not too massive. Obviously not 3% on each and every trade. If you've got 10 or 12 trades open, that's far too much risk open at once, but we'll see a number. So I just report the pips. So although the numbers look quite big this week, the percentages are about the same for a normal week, just because we've been trading the stock markets and the US 30 and the SPX 500. Actually, the SPX 500 is the only one that's still currently open. So anyway, just a moment on that. So anyway, we are up for the week and we're doing okay. So Where are we elsewhere? Let me just go back to the. Well, I'll come back to the calendar as actually go back to the calendar because the date is about to drop. Anyway, so let me just get rid of that. So I'll share this tab. Actually, let me do that straight away. So that's pretty good. So let's just get rid of that. So the key data really, obviously, core sales. It has a key reflection on how the US consumer is feeling and what's going on. If we just go back to the when that data drops, and also the jobs, as I say, has been particularly resilient on that. So the trend is very much dollar positive this morning. It has been for a while. So let's have a quick recap of the data as it's coming across there. So just bear with me. A little nice glass from the cottage we're staying in. Pending. Obviously, we might have had a move already, but let's just wait for this data. We'll look at the data. Normally, we'll look at the charts, don't we? But let's see how the data comes in. So retail sales on a monthly basis is much better than expected. That's a huge. So from nearly -1, we've gone to -1 to 0.6. That's much better than expected. The core is also much better than expected. So again, is this front running of the of the data of the tariffs? It probably is an element of that. Philly Fed is much more positive as well. Is that a reflection of manufacturing improving in the Philadelphia area? Quite possibly, as you saw, it's very volatile, but that's a big positive number. And also jobs have come back in at claims. This is new people claiming unemployment. So the tightness of the US job market continues. Obviously, immigration, migration is having a big impact on that as well. We're yet to see how this is going to play through, but 220,000, 221,000, that's one of the lowest for quite a long time, I'm pretty sure. That's still last week's, isn't it? 10th of July. Yeah, so if this refreshes, it probably won't yet. But 220, where are we? Thursday's number 221. That's still the last week's. Yeah, so it's the lowest recorded new claims for since that 24th of April. So the 220 is a very 220,000 on a weekly basis is a very strong jobs market. Let's not mess about with this. You can see how strong the US jobs market has been. We've just been above that for a few years. Around about there for the last few years. So it's remains a very strong. Oops, didn't mean to do that. I meant to do that and pull it out. Oh, come along this way. That's what we're trying to do. I don't want to go. It's frozen. I've got too many things open, probably. So yeah, let me just check that. You'll see. Yes, you can see that. So there's a strong jobs market. So let's have a quick look at the the dollar. So as you might expect, this is the data coming out now in the 5-minute time frame. The dollar is it has improved significantly. The euro moved down to here to 115.56. It's come back to 115.70 zone. We look on the 2-minute charts, because most of us, without trading the news, will trade these charts. But as you can see, the trend here on the 2-minute time frame, the trend's been down all morning anyway. We had a rally up here into the European Open, into 9:30, into 116 again. But the key thing was the breach of 116, which first happened ahead of as the European traders were coming in. European traders start about 6:30, 7 o'clock. And here at 7 o'clock, remember, this is only the 2-minute chart. We moved that down under the 116 area for the first time since yesterday afternoon, where we had our first dip under. But we can see what's happened now. That data from the US, yesterday's was the PPI data this time. Yesterday, that was and then we rallied. The dollar weakened. This is the normal data. Now we had that announcement from Trump. We went all the way back to 117, but we're all the way back under 160 now here, the euro, and we're back to those low levels. So what this is telling us is the higher time frames are still very much in play, and the dollar continues to improve. That was quite a positive data set for the dollar. And any short euro dollar you've got on they're in play, very much in play, as we can see on our higher time frame. So if we go back to my time frames, which is basically the 4 hour and the 1 day sort of time frames, we can see here on the 4 hour, we've been under the 50 period moving average here since the 7th of July. The red line, we've also been under since that big move down there on the 7th of July. Hope you can see that. I'm using a little screen today, so hopefully you can make that a wee bit bigger. Get rid of all of that. Get rid of that. Can you see? You can. Because I'm skipping between tabs. I want to make sure you can see what I can see. What do I want? That's where I'm on. I want the where's my platform gone? Where's my trading platform gone? Oh no, there it is. There it is. Sorry. So you see here the 4 hour, it's been short all this time, and here and here on the 4 hour, you can see we've tested back into the 20. We did break it there here on the 9th, but that was into the close of the day. It didn't last long. We were back down again, so we're looping down. These lows are getting lower here. You can see here lower, lower low, lower low. Lower highs. So the trend is very much set, and we're support, the resistance. If you're short this or you've been short this, your 20 period has been your key stop loss area. Yes, you'd have got stopped out yesterday on the hoo-ha from Trump's or noises out of Trump and his administration that they were going to sack Jay Powell, blah, blah, blah. I mean, he can't do that legally. Powell might quit, they might put loads of pressure on him, but he's going to hang around. He's a tough old cookie. He's a self-made man, and Trump put him in there in the first place. So anyway, so it's the fight between the two Kevins, Warsh and Bessent. No, Hassett. That's it. It's Bessent is the is the trade secretary, and Kevin Bassett. I call him the Cheshire Cat. He's always grinning. He just looks like he needs a slap on the face sometimes, the way he grins. But anyway, he's a very long-term lieutenant of Trump, big conservative economist, and he's his main economic advisor in the White House. So anyway, as you can see here, the trail of the descending euro against the dollar has been running for a few days now, since the beginning of the month, really. And here we are under the key 116 level. The only caveat on this descent of the dollar, guys, is that it is the summer season. The volumes are a little bit low, not that much lower yet, but the trend is very much set there on the 4 hour. And if we look at the daily time frame, and this is the same across all the dollars crosses for July so far, we are down. We are under 116. That's what we talked about early in the week, didn't we? But as you can see here, as we said earlier yesterday, the 115 for the euro also has a key Fibonacci level at 115.25 here on this leg. This last leg down, that's a fib level there. The 38.2, the first major fib level that's coming in, and it's going to coincide by the time we get there, if this trend continues, with the move that up, with the it's not one else because that's too big. Oh dearie me. Oh, I've got this on screen there. With the 50 period moving average around about 115. So 115 becomes the big support. If this breach, which looks like it's happening today at the moment, following the data of the 116 level. So if we drill down into the lower time frames, we're now 10 minutes in. The first 10-minute candle should be forming following the data. As you can see, it's bought it all back, hasn't it? Interestingly, here on the 10 minutes. So the 5-minute candles was down, and now it's come back, but the trend still remains to the downside. The 5-minute 50 period is at 115.88, and the 20 period on the 5-minute time frame is at 115.80. So we are significantly under 116 as far as the intraday traders are concerned, certainly, and we've pushed to new lows of the day, following the European low here at 115.77. The main data of the day is out, and we pushed to 115.56. So you can see the trend, continues to move down. With all due respect to any obviously political shenanigans that get mentioned, so you ought to be careful, obviously, trading intraday, because all of these black swan events or these unexpected events can suddenly come from left field, and none more left field than Trump and his administration team at the moment. So, but as you can see, we've went into test yesterday's low before that nonsense came out yesterday. So again, the trade, if you take out that as a one-off, if I zoom it up a bit higher, do it the 15-minute. If we take out that, this is an abnormal spike. You know, it took us a while to get rid of it, but we're back to the low of yesterday is the point I'm sort of trying to say. So have we got to a low? Well, probably not, because we're under 116. So we continue to move to the downside. Akshay, Moray, as I say, let me know if you want to look at something differently. So let's just run through the rest of the assets that we have a look at generally. So let's run through the majors. They're all forming the same pattern, even the mighty Swiss franc that has been very big. So the Aussie is under 65. It was under 65 yesterday. It was 64.64 today. Here on this, well, there you go, 15-minute chart. There's the first test into 65. That's the announcement from that Powell might be getting sacked. We went back to our pivot area here and then lower here this morning during the Asian session, retraced and then down again, retraced and then down again. So you can see that leg up, leg, retrace down, and the retrace is getting smaller each time, isn't it? But we're still not looking to take this long here on if you're trading the 15-minute time, because again, the 20 period moving averages provided your key support stop loss area, and that remains short. CAD well under sorry, CAD well over 137 now. Remember when 137 was our cap here. So dollar up, we crashed down the other way around. A weakness of the dollar. We went all the way into 136.74, which again was testing that low from the day before. But now we've turned around. The dollar is back on the front seat. We're back over where we'd moved up to yesterday, and 137.64. Obviously, Carney will have something to say about the latest trade initiatives, but 137.64 for dollar CAD. Here on the 15-minute, and again, dollar bid here against the Canadian dollar, and has been well over its 20 period moving average since 1 o'clock this morning. Certainly when I came in to have a look at this morning around about 6 o'clock, we were breaking out. There's that 7:15 candle, really caught my eye that this morning, and off we've been running ever since. So CAD's been long. I'll come back to Swiss in a minute, because it's it's been the strongest. The other major, obviously, between sterling and the euro is the yen, and we are now approaching 149. As we said yesterday, that very much brings in, let's take this up at least to the hourly chart, brings in the hugely psychological 150 level for dollar yen. So again, same pattern. There's our daily trend line we've had in for a while. We just take this up to the daily as well. Oops. There we are. Yeah, there's our daily trend line we put in a while ago from these lows down here at approaching the 140, the 143 lows at the beginning of the month, and we've just been long since this big candle on the 7th. Took us back through the 20, back through the 50. That was our first entry on the 3rd. 7th we've added to again, and now we are stalling at basically 149 ahead of 150. So bit of juncture on that, but again, trend that remains fairly set. Kiwi, like the Aussie, yeah, under a key level, and this time it's under 60, and we're approaching 59 quite quickly as well. As we said yesterday, I think, didn't we? Or earlier in the week, certainly. There was a lot of fresh air down to 59 for the Kiwi, and that's been maintained. So very strong 3 candle move here. Remember, 3 candles like that, we call them 3 black crows, or 3 crows, consistently sized candles, one after the other. This one opening lower than the close of that one. This one here, the 3rd one, opening lower than the close of the previous day. Gaps in all of those. That's more negativity, more sellers, and then a big gap yesterday. Weren't sure what was happening yesterday because of the hoo-ha over the Trump announcements, but again today, 17th of July, we're down and low, and we've been as low as 59.04, so within 5 pips of the key .59 level, and again another one, dollar up against the Kiwi, having been very, very weak for most of 2025, kicking ass here at the beginning of July. But how long that lasts, will it last through the summer? We shall see as we go forward. Yields last night, just to get a bit of a diversion, we don't trade yields here at theproptrade.com, but you've got to watch what the yield market is doing, what the credit market is doing. 445 on the 10-year, 445.50 on 10-year last night. Got people twitching, and we're higher again this morning, 447.50 on the 10-year. So if you can get that on 10-year on guaranteed US debt, you know, that's very, very appealing for lots of people. But we might suddenly see a sudden, you know, the uncertainty of the Trump administration is perhaps holding people off investing. But clearly, Powell's replacement is going to be much more of a yes man to Trump than Powell has been, is what I'm saying and what many are saying. They need their independence though, but how independent they will be with such an all-wielding president, we'll see. I say Powell stood up to him in his first term after he'd been, obviously just only been appointed then following Mrs. Yellen. But anyway, we'll see where that tenure gets to. Remember, Scott Bessent, the serious grown-up in the administration. Whether you agree with the politics or not, it's something else. But as far as an economist is concerned, or a finance man, you would have to doff your cap to him. You know, he's talked about that being the key pivot, but he wants it at 4%, and we're a long, long way from 4% at 447.50 today on the 10-year. So he's saying it's with a bit of pain, and that it will benefit the US consumer eventually. All this repatriation, or what they're expecting, the repatriation of jobs, and all this charges that the government are getting from tariffs, but somebody has to pay it, whether it's the US business or the US consumer, ultimately the US consumer, and that's going to eventually filter through into spending, isn't it? So anyway, that's their theory. We'll see how it all pans out, but we're a long way from Scott Bessent's ideal world of 4% on the 10-year. But since then, so since the beginning of July, we've had a stronger dollar, basically. So the other two majors, the euro and the sterling. Euro, we saw well under 116, 116.58 at the moment, and sterling heading, as we said again earlier this week, a lot of fresh air between 135 and 134, and into it a few times this week. But to the hourly chart, you can see we've been scrolling lower. I don't want to do that either. Let's go back to the 4-hour chart. Right, there we are. There we are. That's our daily trend line we put on at the beginning of July, and you know, we've broken away from that. With the fall has been quicker for sterling, a lot of it to do with political differences, but all pressure on the new government, the year-old government in the UK. So 135 was breached without a blink, as we said. Again, we said this earlier in the week, didn't we? And again, the big move to 134 as well. So 134 is the key support level around 135 level, but you can see through here and here and here and here. You know, the trend remains to the downside, and as I said earlier in the week as well, or last week, you know, next one is really 132 with a bit of a pause at 133 if this strong trend continues. And at the moment, there's no sign of that turning around in these shorter 4-hour and 1-hour time frames, and even not even, but we got the daily time frame. You can see that turnaround from the beginning of July. So. And we said earlier in the week, or we said last week, the breach of the 50-day moving average was key, and we've broken it and stayed under it quite significant now. So that's a significant break of the 135 and the 50-day moving average. So see what happens where we move away from 134. If it's another leg lower to 132, or we recover 135 and we're back to 136 and not heading back to 140 ultimately. But you know, it's had a really good run. Profits taken off the table, but the trend still probably in place. We're now 1, 2, 3, 5 days under the 50-day moving average. That's significant. Okay, significant. Is it the end? We'll see. As we turn to a downtrend, possibly, quite possibly, on that day there, triggering on the 11th last Friday. So see where the week finishes on the sterling. If we go up to the weekly chart, just fine, got you here. We've had an initial down week, a stronger down week last week, and quite a significant down week this week. The key thing is we are still engulfed at the moment from that end of June week when the uptrend looked absolutely set. But as you can see here, we've descended here rather than consolidated. Last time we consolidated 135, we consolidated at 133 here back in April. Now we're back to 134. So yeah, that weekly chart is looking more higher than it has done for a long time. But see what it looks like when we close out tomorrow's Friday trading. So that's the dollar up against its majors. We've seen our trades from last night. Let's go through the rest of the instruments. The crypto 118,000, so still shy of 120,000 again. But we've had a good week this week. Again, that's that lovely floor we were talking about for a long time, where we burst out through 112, through 118, through to 123, new all-time high, and then consolidating the last 3 or 4 days. Down day on Tuesday, up day yesterday, and a down day today so far through this key one. It's had a key fib level, this extension of these last legs down. Remember we were talking about these channels? This was really positive for a move up. We had this consolidation, and then we broke out. Where was the level? Where was the target? It was at the 161 fib level, 118. Remember when I first put that on? It seemed miles and miles and miles away, but there we go. Fibonacci coming to our rescue again as our 119 extension, I think it was, wasn't it, up here? So crypto, Bitcoin in particular, remains bid. Don't worry too much about it, my crypto friends. Energy, oil has moved down. We had that inventory yesterday, that huge build in the private inventories, and a massive build in the official inventories yesterday. Where's Tuesday gone? Tuesdays, hang on, Thursdays. There's PPI. Yesterday's PPI weaker than expected. CPI in the UK. Where's the inventories on there? Why isn't the oil inventories on there? He says, screaming at his screen. It should show up. Oh, it might be that it doesn't view it as a key event. Put it on there. Okay, apply filter. Oh, that's right. It's a yellow event. Is it not? There we are. Actual drawdown. That was a build yesterday. Oh, there you go. Proved a lie of my own mouth. It was a huge build in private and a big drawdown in official inventories yesterday. Well, that's a bit of a surprise. It might be in the fact that we had this huge build last week, and it was the privates was playing catch up. That's probably what that was, but that's quite a significant drawdown. Interesting, and it's I suppose they've who knows, sort of cancelled out any movement in the oil market. But again, another one that's been testing or trading between these two flattened moving averages, so it's not trending. I'm not particularly interested in at the moment. We've got 20 up there, we've got a 50 down here, so sideways through 67, and last 3 days we've been under 67. So the 50 now sits at below 66 as well, at 65.87. So yeah, trickling lower, the oil market. Metals, gold 3,310, 3,310. We are down today, having been down on Tuesday and up yesterday. Let's just go back to the 4-hour time frame. So here, yesterday's hiatus following Mr. Trump's announcement. Obviously, gold got a huge lift. We went to 3,375 or 3,377, I think, the ultimate. But since then, we've not only have we given up all that gain, we've actually breached below the bottom of it. We're under the 4-hour 50 period moving average, and it's been down this morning, and it's down again this afternoon. And we are moving a lower here certainly on a strong intraday basis. That's actually quite an interesting chart there. That's screaming we're going to get to 3,300 if that strong move down there continues. Whether we'll get there today or not, maybe a wee bit questionable. But the strength of the dollar, or people giving in, liquidating some of their gold holdings, maybe. But yeah, 3,300 looks like it wants to be tested, doesn't it? There's that big round number there. That last leg up there has breached the 61.8 fib in this hour. That's quite interesting. So see this last leg here on the hourly basis, the 61.8 retrace of that top here at 3,375, which we tested again yesterday, has now taken us through that floor at the 61.8 fib at 3,319.50, and we're down now. So there's some significant sellers on the back of the US data. So it's probably sellers have taken that lower. And really, even on the hourly chart here, 3,300 is calling to be hit. I would argue on that. We need a significant turnaround, but that momentum is selling off gold at the moment. So again, if you're trading or if you've got gold positions, be careful. Intraday today, be careful trying to catch the bottom of that one at 3,311. Obviously, the price action could show me up to be a lunatic again, but technically we're into the overbought area just about here, so we might see some buys at 3,310. And if I try and make my, I don't know what's happened to my MACD indicator, but it's still looking, that is still weak and moving low, so it could easily move low. So gold under pressure. And finally, the stock markets. We are 5 to 2 London time, so we're 25 minutes away from the cash market open. The Dow, we pulled our stop loss there. That was an annoying one, wasn't it? We just got, I think I shared this last night, didn't I? We just about got stopped out there yesterday afternoon on as we pulled our stop loss down, and then it had, no, hang on a minute, was it the other way around? I can't remember. Did it take us, I think, I can't remember. But anyway, I can't remember we moved this down. But anyway, they're both winning trades, both half of that Dow position, and we're back to where our stop loss was at the moment. So we're up. Again, that was yesterday's panic on Trump's announcement that, or suggested announcement that he may be sacking Mr. Powell privately. 43,760 we went down to, and we're back to 44,230 currently. Let me give it. Stanley, my big black dog here, has decided to get out of his bed and have a scrabble around. So if you can hear some scratching noises, that's Stan having a scratch. So yeah, stocks back up and holding a resilient number. I mean, some of the numbers that have been coming out of the second quarter earnings have been really strong. JP Morgan's was smashed out the park. Morgan Stanley was strong as well. Citi was a good one. The only outlier was really Wells Fargo. But they may be turning the corner, so they may be the best value of the finance banking sector going forward. But stock markets continue to hold, and again, the key 20-day moving average here holding. Even with Tuesday's sell-off, we bounced off it yesterday. I haven't poked under it, so we're looking to perhaps move that up. So we are out of that particular position. The one we've got open is the S&P 500. That's still open. It's been open for quite a long time now. When did we open that? The 9th of July, was it? Yeah. So we're down and up. So the stop loss has been pulled up. It's now above the 20-day moving average and just shy of the 6,200 level. And it's just about back in the money again. So we came within a smidge of that level yesterday, didn't we? When I was traveling. There we are. On Trump's announcement. But again, you see 6,002 wasn't actually tested. We were above it, and our stop loss is there at 6,191, I think. Yeah. So that's back in the money from being out of the money and in the money and out of the money. We got as high as 6,298. So we haven't got to 6,3. My stop loss is 3 times the, 1.5 times the daily ATR when we put it in, which is up there at 6,350. But again, I might get a bit bored with that, and because it's a lot of sideways action been going on there. So anyway, we'll see how the earnings season continues. Pepsi have reported the head of the market open this morning. Who else is reporting this one? I can't remember who. So there's some significant ones reporting this morning. Let me just find out who's just quickly before the open. Yeah, GE, PepsiCo was the big one. TSMC report this morning as well, much better than expected. Now I'm just looking at a sea of green here. If I just share this tab, this is earnings whispers, guys. If you haven't got a feed from Reuters, or obviously, let's get rid of that. Get rid of that. Get rid of that. It's got so many ads to it on here. You can see there's basically, the green column here showing these big companies beating Everence Health, which is a big big healthcare company, $9-10 billion quarterly turnover. It's the only one that's really missed there. There's some significant beats there. 16% for GE Aerospace, PepsiCo's 4%. That's pretty healthy. Texas Capital Box shares 30% there for US Volvo, the so their electric cars are going really well out of Sweden, now part of the Tata Group, aren't they? Snap-on 2%, banks 7%. Yeah, so the banks have been doing quite well there. Manpower Group positive. So yeah, but I mean, the upshot of that is it's a very strong beating of expectations to take. You look at that, and then you drill down into individual companies and some of the big corporations. Abbott obviously been through the mill a bit. Still beating, but a small beat there on earnings and from a surprise point of view. But you see revenue and earnings mostly in the green there. There's a few reds. Travelers, well, that's people are cutting down on the traveling in America. That's another indicator of that holiday. But yeah, that's a relatively good earnings numbers so far ahead of the bell. If we go to after the bell tonight at the close, the big one is Netflix. 11 billion revenue from Netflix expected, and Interactive Brokers also reporting after the bell tonight. But Netflix, obviously, a darling of the stock market, or has been a darling of the US stock market, all about what their subscription numbers are looking like. But consensus is $7.7 per share on Wall Street expectations out of Netflix shares. But yeah, so yeah, watch Netflix after the close tonight. So let's bring the S&P 500 back in. It's the only live trade I have at the moment. And if I just check my trading platform on my other, if I bring it up, I might be able to bring it up here. I can bring it up here. So at the moment, what my end of day strategy, obviously it's still a long way to go. It's looking like Euro, Oz, and Aussie Swiss. So let's have a look at what that's looking like. It's looking like a short for Aussie Swiss, although the stop loss looks a bit tight. It's only at 30 pips. That I don't know if you look at the if you look at the Aussie Swiss, you can see there's a big resistance potentially. That's maybe it's pushing low. So I might have a look at that as we finish Aussie Swiss. Let me bring that up for you. If you go to the UD Swiss on the crosses, Swiss. Remember, this is a day. That's the hourly chart. It's bounced back up. Daily. So this is my chart is telling me this is a potential short. You can see why that's triggered. We had this big uptick here on the 10th, and then since then we've been consolidating. So yeah, we were short this, weren't we, Aussie Swiss off the RBA, but it's a red day at the moment, so that's looking like a potential short position with a stop loss up here somewhere overnight tonight potentially. The low we need to get through is that 51.79 to the downside for Aussie Swiss. The other one my system on the main system is looking at is Aussie Euro Oz again, but I think that was we were long that, weren't we, on the Where's the Euro Oz? And that was this morning's, wasn't it? Euro Oz. We've been long this one this morning. That was it this morning? It was Kiwi, wasn't it? It wasn't Aussie. So this is looking to trigger long. You can see why as well. We're triggering. We're moving back over the 20 period. That's looking like a long position again. Perhaps test this high. We got to on the 7th. The intraday high took us to 108.90 zone. So that's looking like that might trigger long later on. On the more aggressive system, which is the two we took last night, which were successful. So would you show us a bit of a pitch? We got Aussie, Kiwi, Aussie, sorry, Pound, Aussie, and the DAX. Interestingly, DAX, a long position on the DAX potentially tonight. Aussie, Kiwi, a short position, so it's Aussie weaker than the Kiwi, which is interesting. Again, that's a bit of a rollover. We had a big old move down today, so that's looking quite interesting as well. Aussie yen, let me show you that one. Aussie yen. It's not Aussie yen. Aussie Kiwi. There we are. Really strong move, but that's a nice formation from a candle pattern. New low here for the 3 candles. That I might even open that now. On that candle there, my friends. Actually, that's looking 109.30. I think we'll be taking that short. But again, anything could change obviously before the end of the day. But I might start opening that position now. Aussie Swiss. Sorry, Aussie Kiwi. Let me say again, Aussie Kiwi. The screen you can see. Hopefully, that's looking quite interesting. The other one the scanners come up with is Pound Oz as well. That's a long position. Again, from a solid floor. So let's have a look at that. That's looking pretty good as well. Pound Oz. There's a solid floor down here, the rounding bottom. I'd like to see it over the 20-day, but and then we've obviously got that flat 50 to get over, but you still might be 50 pips on that, 40 pips on that, looking quite possible. So Pound Aussie might be looking to go as well. Might get again another one that's looking, might end up dibbling my toe in that a bit earlier than the end of the day on that one. So keep watching the Discord group, guys. Remember, that's why I put everything up, what I've done, or when I'm doing it. I try to be as close to the time I'm doing it as possible. But that's the 2 and the DAX as well. So Aussie, Swiss, Aussie. I keep saying Swiss. I mean Kiwi. Aussie, Kiwi, Pound Oz, and the DAX on the fast aggressive system, and the slower end of day system is looking like at the moment Aussie, Swiss, Euros, Aussie, Pound Yen, Pound Kiwi. So it's following through from the moves yesterday, Pound, and that's the ones on that. But again, I'll update everyone later on tonight what actually happens. We do it here on the Discord group. This is the general chat, what I said for your questions. Oh, I didn't actually send that, did I? Oh, that's why that didn't go. That wasn't true. That was anyway. But there's our trading strategies, and I said the only live skin in the game trade I have at the moment is this SPX 50, which is in the money. Our stop loss is at 6191, and the 2 trades from last night are now fully closed for a gain of 93 pips. And I put this all on here, usually later on than 16:30, but I'm away from my main trading desk at the moment. So I'm going to wrap this up now. If there's any questions, anything else anybody wants to have a look at, let me know. What's that say? T Carriage's price target on Pfizer to $30 from 28 or PFE. Okay, interesting, Michael. Pfizer being upgraded. Sharing a bit of information. We can't actually trade Pfizer shares here, so Michael's sharing it. It's obviously perhaps long. Pfizer, I worked with Pfizer for many years, or not many years, 3 or 4 years, back in the late 90s, early 2000s. Yeah, long-term investor, major, obviously, financial, pharmaceutical company. So thank you for that, everyone. I will see you all again tomorrow. Tomorrow we'll be live for the University of Michigan data, the consumer sentiment, their inflation expectations, their sentiment numbers, but key data out of Chicago tomorrow, 3 o'clock my time. Let me leave you with our only. Actually, let's leave you with gold, because gold is having a right old move. It's bounced off that 11 area we were talking about as we were speaking. So there's that 310 area, and we're 3,310 area. That area we looked like we were breaching that fib level, that 61.8 fib level. We're up a bit at the moment, but that's still looking like pressured. So we'll see if we get some buyers. But we are under that key fib level, which is at 3319.50, 3,950 of that last leg up. But there's obviously been a few legs ever since. So yeah, leave you with gold today. So take care, everyone. See you tomorrow. And as ever, may the pips be with you. All the best.